So I'm going to be talking about entries and exits in great detail. But I just want to run through what we saw in the Dow today. I like the Dow a lot. It's nice and volatile, a lot of momentum. I'm a momentum trader, so I'll go through the kind of things I look for to identify the trades that I like. And also, a good question came in earlier on about what happens when there isn't momentum, when perhaps it's summer doldrums and you've got much lower volume. How does your system cope with that? So I'll go over that aspect as well, because I think that's a really valid point. This is a really nice volatile day, start of the year. The markets have really come out of the gates in quite some aggressive fashion. So let's just piece this together and talk about why I made that call today. Okay, so by all means ask any questions. If you want to chat at any stage and turn on your mic, that's fine. Just use the chat box and then we can sort that out as the session goes. I'm recording this so you can go over this again. Okay, so what we got here is the Dow on a 5-minute chart. The 5-minute chart is the center of my system, but it is only one element. So let's get something clear right from the start. I do not sit here with 5-minute charts. You're just bashing out trades. That can be unproductive. This is a nice, clean, high volume day. So there are days, for example, yesterday, the open, in fact, a lot of the session was pretty choppy, and I'll go through yesterday as well, so you can compare a good high momentum volume trading day with a low volume riskier day. Okay, so what you're looking at here is the 5-minute Dow with the previous day's close, the cash close. So I've got this on this is pro real time, linked to an IG account. A lot of the trades I take are on my futures account, which is why I post my futures account on the meetup website, which and the scalperschool.co.uk website as well. We'll talk about that in a minute. But anyway, so this is the cash close. You can see if I drop back to yesterday, this was really choppy. Just floating around for most of the session, and then we sold off. I caught this move here into the close, and then topped it off, took it off as we drifted, and then the rest is history. We plunged about I must have been about 450 pips, I think it was, and crazy. So today. So here, the close was here. I've got this at 585, so right back to support into the close. So that's what I started off with today. So we initially came into the markets with this bar here. That's the first 5-minute bar of the day. Immediately dropped back. I started saying I would look for 550, just under here. It pushed up, and in the end, I took this. I actually took the close level itself, 582, 583, and then I took it here. Actually, took it here on a retracement. So we had this initial push up. I didn't get filled down here, so I held my order down there at that level. Because once this was resistance, this was now support, so basic technical trading, and then of course we got this nice move up. All this after a missile attack on Iran. So the Iranian missile attack on Iraq. So crazy. Ordinarily, logic would tell you that if you've got warlike activity that is going to shake the bones of a market, you would expect this to drop. But if you just stick to the technicals, then you should stay in and capture these moves. The thing is, What I'm looking to do with my system is I'm looking to do the same thing every day and achieve the same results. It's as simple as that. It's, you know, anybody who does not have a system is going to struggle. Are these markets random? Yes, they are random. There are no two identical days, but there are behaviors in a market that you can anticipate, which I have back tested over hundreds and hundreds of hours, and this is the result of what I'm doing. So that's aspect one of the trade, you know, gauging what the market's doing, A, initial move, B, on the previous day's close. The other element, other core element of what we do in the trading room, because I operate a live trading room, as you may or may not know, is we look at the first high and low of the open 5-minute bar. So the very high and the very low. I'm not interested in the candle. I'm not interested in the color of the candle. All I'm interested in is the high and the low within the first 5 minutes of the cash market. That's all I'm interested in. When I combine that with the gap, then I'm looking to see if the market is respecting A, the range, and B, the gap. If you get those two things combining and pulling together, then the probability of that market holding is high. It's very high in this particular case. So I think this kicked off, so the market opened at 2:30. We had a push up here in the first hour, pull back. Mr. Trump started speaking. That's, I was going to say irrelevant. It's not irrelevant, but what is relevant is how the market reacted to what he was saying. The market started to hold, it pulled back a little deeper, and then we got this nice move. If you're an Elliott wave fan, which I am a huge Elliott wave fan, this is a 1, 2, 3 wave move. I also apply that theory to data. So we've got non-farm payroll on Friday. So not interested in what the non-farm payroll is, whichever direction we get, if it's a big push up or a big push down, I would look for ideally a full retracement. Ideally, it doesn't always happen. Otherwise, I would look for a 70%, 60-70% retracement. So if it's really bullish, I would look for some kind of pullback here, here. So this is 1 of 2 points. If I get a stop out, and then if I'm very patient, which I ultimately try and do, ideally wait for that full pullback. Otherwise, if it's really bullish or really bearish, you only get a 50 to 70% pullback. Okay, in recent data moves, the last couple of non-farm payroll moves, I think 2 payrolls back, we had a 70% drop on a pullback. And I think the last non-farm payroll, we did not get a pullback. It was very, very shallow. If you didn't take the break, then you didn't get in the move, even after the cash open. So this is not 100% successful. Nothing is 100% successful. This setup isn't 100% successful. In fact, a study done by one of my scalper school graduates, he took 9 months worth of data. This study is a couple of years old now. He took this setup, this system, tested it over 9 months worth of data for the DAX and the Dow, and came back with a Excel report saying it was 77% successful. And of the second moves we have, the runs tended to be between about 70 and 150 pip moves on the reload. So we have 2 methods of trading this. We're looking to scalp. You could scalp the break for 25 to 30 pips, and then we look to reload. If it reloads, then quite often you can leave it open. If it's a really good reload or on a really good day, of course this could work to the downside as well, then we leave this open. Okay, a couple of other things to note. So let's get on to my core subject about, no such thing as a bad entry or a bad exit. So a couple of other things to watch out for is volume. So if you put volume on this, you've got this huge spike here. Then also, this is something just to note, not necessarily take as part of the setup. We come up on low volume, and then you get another volume spike on the pullback. So this is confirmation number one. For the initial move, and this is confirmation number two for the second move. And again, you can see we're coming up on low volume. So unless, obviously, markets love round numbers. This is, the 800. So we've hit 800, and now we're drifting lower. So we're 30 odd pips, 30, 40 pips off the highs at the moment. So you got number one, the range. Number two, the gap. Number three, the volume for here and here. Number four, you've got the wave pattern, a 1, 2, 3 wave pattern. This ticks a lot of boxes. Today's trade ticked a lot of boxes. Now the box I'm not going to show you today is the anchor system. The reason why I'm not going to show you the anchor system is because if I show you the anchor system, I'm giving away one of the major component parts of the system. I'm not prepared to do that because I invested huge number of hours on that. So that is that's how the markets behave today. That's why I called the long today. If you look at, I've already posted this on the website, but if you go on to scalperschool.co.uk and click on the Traders Talk button, which I'll put in the room, then you've got summary of what I've been up to. So this is the call I made today. So lots of I'm typing very quickly because I'm making some quick decisions here. So I buy Dow at 550. Posted that just after the room. I don't always make. Yesterday was very choppy. This was the Monday, 6th of January. Made a little bit of profit on the gas. Minus 17 on the Dow, so messed up. Didn't capture the main move there, and a little loss on the oil as well. Here's a 635 profit on. I've not dated it. I think this was back in the last week. I think I normally put a date on it. Apologies. And then this is into back in the last year. So we've got 17th December, 12th December, and these all sorts of little losses, decent profits. Okay, so just keep a check on that. So when I talk about no such thing as a bad entry, only bad exits, what I'm really talking about is I get a lot of people who come on the program and come into the trading room who want a precise level of entry. That's fine, that's fair enough. I think that's a good attitude to have towards trading and a good question. But my point is, if you get too tied up with entry points, you can miss moves. Because the market's not there to sit there and wait for you to get an entry, and it's not going to sit there and give you the exact entry you want every day. It just doesn't happen, as you no doubt found out if you've been trading for any length of time. So what I'm saying is, if you've got a lot of volume, sorry, I've taken the volume off, haven't I? Bear with me 1 second. Excuse me, that's better. Let's put that on. Let's take this off again. this is one key indicator. If you've got a huge spike in volume like that, then there's a lot of, you've got to, it infers there's a lot of belief in what this market could do. So just concentrate on getting a dip into this range. Now, ideally, it will be a nice round number in the middle, which is ordinarily around about the 550 mark. Well, this is about 5 or 6 pips above that. So that's why sometimes you just have to go in, and occasionally gives you a bigger stop. Now, ideally, in a situation like this, I would bid on the midpoint. In a situation where we're pushing up, decent volume, I would bid on the midpoint. But if I'm not filled, then I will just go in higher. So I'm not going to spend time worrying about the fact that I've not hit the midpoint. I'm just going to make sure I get in the trade and keep my stop the other side of this range. So that would have required a good 40 plus pip stop to buy that mid-range. So if the bigger the range, the smaller, I would suggest you might even want to go in half size, but make sure you leave a nice big stop. Sometimes it's a tighter range, and sometimes you get cleaner signals. And we've got 3 types of entry points on this, which I'm not going to go through now because, again, that's a key part of the program. So I'm giving away a lot for free here. I'm not prepared to give away the whole program. I'm going to sit here and teach you the whole Scalper School program because I want you guys to understand. In order to understand the whole system, you've got to understand how the anchor works, and that's a side of this chart. That's a completely separate chart. But the anchor system is really good for telling us when the markets are not setting up, then potentially not as clean as we need for a higher probability trade. Okay, let's just come away from today's market for a moment and then look at yesterday's. So you can see I've actually ranged that one already. Let's have a look at the open again. Oh, here's the open. So in actual fact, we had the same high volume at the open here. So the volume actually looks very, very similar to today. But we actually tail off. So we immediately close lower. And then we dip under the range. Now let's get the gap as well. Let's do this properly. Let's find the gap for Monday. So the Monday gap is on the cash market is quite good. So 704. So this is what we were looking at yesterday. This is what we were presented with yesterday. The probability of gap fill is high if we get confirmation. So let's just, if we break this down, so we come under the range yesterday. Decent start, decent volume, so that's one box ticked. But then we immediately, within 10 minutes later, we're breaking the low. So that's the last thing you want to do is start trading that if we are coming under the range. We came under the range on low volume, then we started to pick up here as we held the range. Then at 3 o'clock, which is a typical reversal time in the Dow, once we had the data out of the way, we got a little bit more volume, but it wasn't great, and we didn't gap fill. So these are signals, these are all signals that this market is not happy. If you don't get volume confirmation, if you don't complete, if you expect the gap to fill and it doesn't, I expected the gap to fill and it didn't, These are all signs that this market is not going to behave and not potentially going to give you what you want from it. Come back under the range, we look as if we're going to perk up, which is, this is where I took it up into the close and then closed it off once we started drifting, and then the rest is history. We close okay and then immediately start to drop after the cash market's closed. So that's the close there. So all of this was kicking off afterwards. Okay, so you can use something as simple as volume and the location of the gap to decide whether or not this market is worth going for. So it's crashed into a lot of resistance here and then immediately set back. So this is a real nothing day. This is a real going nowhere day, and so a few ways of detecting whether or not you can tell that or not. Compare that with today, and even now these little pullbacks appear to be getting bought, although they are lower probability. We're in doldrums now. It's lunchtime in the US, 22 minutes past 1, and the volume is coming off. So we're going up on lower volume, not what you want. However, if this is really bullish and we come back into this area somewhere on higher volume, then you might want to take that again. Like I said, if you've got a market that has triggered and pulled back, then quite often it's on quite a few days it's worth just staying in the trade on the second trade until the end of the day. But of course, if you're hitting major resistance, then why not take it off? Made a day's money, then take it off. Right, any questions? I've been talking a lot and no questions been coming in. So any questions on that? Let's have a look at the bigger picture while you're maybe considering a question. So this is my analysis on this is what got lined up on the daily chart. So I'm interested in structure. I'm interested in Elliott wave. And so just looking to see how we can, at the moment we are mixing, it's not unusual for a market to come into the beginning of the year and show some mixed signals like this. So that the first trading day on Friday saw us sell, and then we dipped back into the averages. I think we've probably got a 20-day average here. Let's have a look. Okay, so we closed under a 20-day average and now we are closing up. You can see we're sticking to this 20-day average fairly well. So obviously if we close up, we've got non-farm payroll, US monthly jobs on Friday. So tomorrow I would try and get a pullback around about the 500, 520 mark. I'd like a retest of that 20-day average if it allows me, assuming we close up here, of course. So we need to hold this 722 is 2019 highs. So if we hold this high and then make a new break and make a new high this week, whether it's Friday or tomorrow or whatever, then obviously that's really, really bullish. If we close back, if we can't close up here, can't hold this next week, then this could roll over. So the jury's still out for me. Obviously this is a bullish move into the back end of last year. The dips got bought so far, but if we can't hold this area here, this 722, then that could be key to this major trend line that I've got down there in this chart. Okay, one other thing to watch out for One of the most, anybody into chart patterns, if any of you listening, watching are into chart patterns, tell me what you best like about this chart, and I'll tell you what I like best, what I like about it the most, where I think some of the best cluster points are. That's a good. I think that's a good word to use in this. Finding price cluster points. Anybody? Okay, I think the real key cluster points for me is here on this three-wave move here for a buy signal. I was interested in, well, I'm still interested in that as a cluster point for a potential sell. Obviously, the last thing I want to do at the moment is suggest selling this. But you know, if we punch up here and don't start closing above that 29,000, then I would start to look to get swing trade short. And you can see the way I've marked cluster points here in other points as well. You can see how I had this marked off in the summer. So if you're trading the summer, you just need to be, you know, there's lower volume, a lot of profit taking. This is a typical market cycle. The most profitable time to trade is normally October to April. September is traditionally very, very volatile, and this September was no exception. In September this year, we dropped right into this support pattern here, and then ultimately kicked off and went on some nice runs. Okay, so let me answer my own question. I posed in the meetup room, I said I was going to talk about no such thing as bad entries or bad exits. So let's have a look back at this. So my main referral was to do with 582, wasn't it? 28, 582, I think it was, yeah. Yeah, that's it. My main point of saying that was, don't be sort of, I mean, I put orders in the book. I'm a futures trader, so I put orders in the book for specific prices. But if I'm not filled, I will move those orders up or down depending on what the market is telling me. It might be slightly out, I can't remember. Anyway. Okay, so these are a few core elements that you can use, and you can see how this 20-day average has played a part in that pullback. And at the moment we're underneath that at this 20 average, so we need to go back above 780 for this to be confirmed. It's much, if you miss these moves, if you don't get in on these moves, they're much harder to control and anticipate, and that's where you could really chop your account up if you try and chase the market. I do not chase the market. I do not buy highs, and if that means I miss moves, that's fine. I miss moves. But I think one of the aspects of entries and exits is to discipline yourself not to chase the market. So, for example, this start I would that's a terrible place to buy once it starts pushing up there. That's once it starts pushing up here. That's a terrible place. These are all these entries are pullbacks. So if I get rid of these that's the worst places to get in. If I look at the best or better places to get in, the obvious one I've talked about, you see an opportunity to get in there, an opportunity to get in there, that pullback there, and now potentially these pullbacks here, as we've been speaking, this 750, 760 has potentially been a decent place to get in here. So it's all about pullbacks. And of course, flip it if it's short. Let's look at oil, because oil's been selling like crazy today. Let's look at oil. Oh, it has. Oh no, it's not bounced. At Invents today, this was the invent range at 330. So we dropped, did a, looks like a, not quite a 50% pullback. 1, 2, 3, 4, 5, and we're still selling. Yeah, don't try and buy. Yeah, if you've got a market like this that's decided to sell off, don't try and buy bottoms. That will just kill your account if you keep trying to do that. If you want to trade oil to the upside, then you're going to have to wait for at least a 4-hour chart. You can see we are in major 4-hour support territory there, but I would not want to get in front of that at the moment. That's a very aggressive sell-off, so I would not suggest you get in front of that. Right, I've been talking for half an hour now. Anybody got any questions? I'd be very interested in the sort of subjects that you would want to see covered as well. I've got some ideas for future sessions, but let me know if you've got key questions or areas that you would like to have a meet-up about. Like I said, if you want to switch your mic on and chat, that's fine. That's great. Okay, so if we break that 815, we could, who knows, we could go to 29,000, who knows. That is looking good at this stage. So not chasing the market, not trying to, certainly not trying to look for any sell signals on a day like today, and using volume and gaps to confirm. All right, let me just finish off by saying, if you guys want to come in my training, if you want to learn the whole anchor system and the whole, the main elements of the system, particularly for trading data as well as day trading the DAX and the Dow, then come along to this, have a look at this program element here. You can see it's a 4-hour online program on Saturday morning. The next one is the 18th, that's Saturday week. If you want to come into the trading room earlier, you can look at the recording for last session. So the system is broken down into modules, clear and precise modules, looking for the trend of the day. Then we do a whole study on the anchor system, the golden anchor, what it's called. And the golden anchor is, there's 3 entry systems on the golden anchor. So if you're in doldrums, if you're in lower volume like the summer, the golden anchor tends to override the 5-minute chart and gets you into some moves in quieter times. Gaap strategies, we have 2 Gaap strategies, and they are key. You've seen an example of one today. Actually, there's more. There's probably about 3 strategies to gaps. There's 3 aspects to gaps which are crucial on what happens intra-week, not just intraday, but intra-week. The chart system setup, very, very simple way of analyzing and preparing for these high probability trades. Risk management, there's not enough time spent on risk management. I think it's absolutely crucial. I think it's, if you're going to manage your account, if you're going to keep on the right side of your trades, or keep building your account, you really need to be very, very clear about aspects of risk management. Live trading, so there's simulated trading in the program as well. All of this is recording, and there's check sheets and system specifications to go out. And then that gives you access to the 2 things. It gives you access to the live trading room, which is a minimum of 4 sessions a week. This week it's 5 because we've got non-farm payroll. The alert room is working for 5 Euro sessions and 5 US sessions. So there's a lot in this. Yeah, when you buy into the program, there's a lot of support, a lot of time devoted to not just about showing you what I'm doing for educational purposes, not for trading purposes, but there's a lot of effort and time that goes into opening the room up, showing you what I'm doing, showing you how I'm preparing to trade, showing you when I'm taking trades in 10 sessions a week. Obviously only 4 or 5 of those are in this webinar room. And then we've got the weekend video, which I spend a good 3-4 hours of preparation over the weekend. And then these alerts can go to your apps on your smartphones. Okay, so there's one running on the 18th, one running on the 1st of Feb. If you come on the program, you're very, very welcome to do retakes. I've had people come back into the program who've taken the program about 1, 2, 3 years beforehand. It does get refined. The refinements tend to be very minor, but nonetheless, if they are refined, emails go out to members and then they get the chance to come back in again and do a free retake. So I am about to put the price up. I haven't put the price up for at least 2 years, and with the resources, I'm putting out extra resources into it, so the price is going up by £100 in the next 7 days. So if you're interested, come on this page, come down to the first PayPal button for sterling, second PayPal button for dollars, and then I can grab your contact details from the PayPal account, and then confirmation emails will go out, and then we'll get you involved in the program, we'll get you in the live trading room. All right. If you want to stay tuned what we're doing, stay tuned onto this page here for all my posts and screenshots of the account. Any questions? You've all been very quiet. Very quiet indeed. All right. Well, thanks a lot for joining me. And I will post the next meeting up. I'm going to have these at 6 o'clock every Wednesday. If oil is getting better to trade, then I'll spend more time looking at oil. Asif, good to hear from you. Thanks for coming along. And if other markets are setting up, then I'll talk about those as well. I used to day trade beans a lot, but they're not great trading vehicles at the moment. Yeah, the volume used to be terrific in beans. It's not anymore. DAX has been great today. That's how the DAX behaved today. But yeah, nice trades on the Dow. At the moment, it's not, hesitate. Little dips, even the little dips are getting bought, so it's a great market. Right, thanks very much for joining me. Have a good evening and stay tuned. And anything you want to ask me, drop me an email, give me a ring, anything you ask me, and then we'll go from there. Thanks a lot. Enjoy yourselves, and I hope to see you back next Wednesday, if not before. See you then. Bye for now.